This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index currently at $43,730. Bitcoin is pretty flat over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Illiquid supply, which tracks the volume of coins held in wallets with little to no history of spending, has surpassed the May 2021 peak, according to this chart, reaching 76%. Glassnode telling CoinDesk the data seen in this chart is a sign of Bitcoin accumulation, adding these often represent coins socked away in cold storage, crypto speak for storing crypto offline, and the wallets of hodlers who undertake a dollar cost averaging strategy. Meanwhile, in highly volatile action this morning, Bitcoin climbed from $43,500 to above $45,000 in the space of a few minutes, but gave back those gains even faster. World markets were declining following the banking sector, which felt the severity of Russia's partial disconnection from SWIFT by 80%, according to an FX Pro analyst. Let's take a look at some of our top stories. This morning's run came following President Joe Biden's State of the Union address last night, where he talked tough on Russia, and as Fed Chair Jerome Powell sat down for the first of 2 days of testimony in front of Congress. In his prepared remarks, the Fed Chair reiterated his expectation that despite the uncertainties unleashed by the Ukraine war, the U.S. Central Bank will hike the federal funds rate when it meets later this month. Powell further stating that Russia's invasion of Ukraine could emphasize a need for cryptocurrency regulation to prevent sanctioned individuals from using cryptocurrency to evade sanctions. Right, joining us now to discuss is Moya, Senior Market Analyst of the Americas at OANDA, a forex trading broker. Hello there, Edward. As always, good to see you. So we're seeing a lot of volatility behind Bitcoin. I wonder what you think is driving this right now.
Well, there's several catalysts right now, and I think what's been fascinating is we've been able to see Bitcoin has been able to muster up a rally even when equities are selling off, as treasury yields have been in free fall. And this is an environment that is showing you that there is growing widespread appeal for cryptocurrencies. I think that there is a lot of volatility surrounding the situation with Russia and Ukraine, and as you're starting to see currency crises emerge, the ruble has been in free fall, and I think that the intensifying sanctions are likely to make a lot of investors, especially Russian citizens, desperate for finding alternative investments to fiat, and you're going to see crypto is going to become a preferred avenue of that. I think today's announcement that the G7 is looking to possibly make that a little bit harder for Russians is why we've seen Bitcoin a little bit pull back from those highs. But I think what you're probably going to notice is there is, I think, this sigh of relief that the cold winter for crypto appears to be over. I think that now you're in a market where there are inflationary pressures, there's actually growth concerns down the road, and this is an environment where you're not likely to see treasury yields continue to skyrocket. And that's been what's, I think, the
we have a chart on the
primary
10-year bond yields we can show.
Oh, yes. And I think that's been the primary catalyst for what kind of led to that crypto winter. And I think that now that we're seeing investors are a little bit more, I think, concerned about recessionary fears at some point next year, that the curve is going to continue to flatten, you're probably going to see that I think cryptos are going to become a much more attractive investment here, as equities will likely remain very choppy. And no, I think right now this is an interesting moment for cryptocurrency, and you're probably going to see, as equities continue to struggle, to regain that strong bullish momentum that we were kind of used to over the past couple of years, you're going to see, I think, more interest growing into crypto, and that's going to be good for long-term growth.
So are you buying into that narrative that Bitcoin is being used as a safe haven, digital gold, especially in countries like Russia and Ukraine right now?
I think for certain economies, yes. I think if you're in an emerging market, yes, completely. You're going to crypto as a safe haven. I think for U.S. investors, now it's still the ultimate risky asset, and I think you're going to continue to see that. For Bitcoin to really extend and break out of what seems to be a widening trading range to really clear that 45,000 level confidently, you need to have risk appetite firmly in place. And that's probably not going to happen until we start to see some better headlines out of Russia and Ukraine. And I think that for the most part, though, Bitcoin has proven that it's been able to become an attractive investment for many abroad. And right now, you're going to see that the next round of investment is still waiting. And I think there is still that blockchain, the new internet. I think you're going to probably see those investments will really be more second half of the year type opportunities. And for everyone who's been focused on altcoin season, I think that's going to be pushed back a little bit while longer. But for now, I think the focus is on Bitcoin, as this is going to provide probably greater opportunity and more stability for a lot of these investors in countries that are struggling.
Edward, do you have a sense of where the buying is happening regionally, where the selling is happening as well?
The selling, I think for a lot of investors, the selling it's been mixed. I think you did see a lot of institutional investors. What happened was, given the developments with the commodity, so many super commodity cycles, it became apparent that you were going to see an exaggerated move higher with oil, with wheat, palladium. These were clear trades that the market knew you had a major move higher. Whereas for cryptos, it seemed that they were going to appreciate, but nowhere near the pace that these other markets were providing over the short term. So I think you saw a lot of institutional money kind of pivot towards those opportunities because it just seemed it was a slam dunk trade, and it probably remains one for many until we see a better outlook on supplies.
Right, so it looks like it's going to be a choppy market for the short term. I wonder what's your 6-month projection of where Bitcoin's headed?
Well, I think it's going to be a broadening formation, and I think one of the hardest things to get a handle on is what is the current market environment, and we're starting to see oil and gas prices are skyrocketing. This is really going to hurt the consumer. The global economy now has a major risk that has surfaced out of nowhere, and I think that inflationary pressures right now are leading to central banks hesitating into aggressive hike tightening. But what's going to happen is a few months down the road, the Fed is going to be facing inflation that might be peaking, and they're going to have to decide whether or not this is when they're going to do supersized rate hikes and become more aggressive on the balance sheet. That could trigger a de-risking moment where you might see Bitcoin could be vulnerable to another sell-off. So I think the market's going to continue to be very choppy. I think short term, it seems that Bitcoin's getting a lot of momentum, but I think it's going to be difficult to really clear that 45,000 level. If it does, you would want to see it trade above there for a couple weeks before you really have the all clear signal. And I think it's important to feel confident that you're not going to have a policy mistake by the Fed, and that would only be if they have to aggressively tighten policy. So there's still a lot of uncertainty until we have a handle on inflation. But for now, I think cryptos are still at attractive price to be holding in them.
Yeah, I guess there was a sense that, well, the Fed has ensured that they will be raising rates this month, but there was a sense that, well, with this Ukraine-Russia war, that perhaps maybe they would stall, but that doesn't seem to be happening. So they're going to try to get inflation under control. Edward, thank you so much for joining us. Appreciate your insights. That was OANDA's senior market analyst of the Americas, Edward Moya. Right, coming up, BTC price analysis with CoinDesk markets analyst Damanick Dantes. More. That's next. Welcome back. Digital Currency Group authorizing $250 million worth of buybacks for its Grayscale trusts included are Grayscale's Litecoin, Zcash, and Bitcoin Trust, which continues to trade at a notable discount to its net asset value. DCG is a parent company of CoinDesk. Meanwhile, Ukraine will conduct an airdrop of an as of yet unnamed token to reward donors who have contributed money to its official crypto addresses. Officials say to get your donations in by March 3rd at 6 o'clock Kyiv time to be included in the airdrop. The announcement elicited $7 million worth of crypto donations. And of course, this has prompted folks to shill their own coins. Justin Sun tweeting, quote, answering to the humanitarian appeal from Mikhailo Fedorov, the Vice Prime Minister of Ukraine. Tron community has donated over $1.2 million in USDT TRC20 tokens, but now the airdrop just ignores them completely. It is just unfair. We need to fix it. All right, anyway, Ukraine saying that any Russian soldier who surrenders will get a payment of approximately $48,000, and crypto could play a role in this, prompting comments like this from Deterministic Optimism 73, 1 BTC equals 1 Russian tank, we are still so early. Unclear if that triggers a tax event. All right, joining us now to discuss the crypto markets is CoinDesk markets analyst Damanick Dantes in Brooklyn. Hello there, Damanick. So let's talk about some these BTC volumes we've been seeing. Compared to the last 2 years, Bitcoin volume still trading relatively low. But if we compare within the last couple of days or a month, there seems to be a spike.
Yeah, it's definitely been trending low over the past year or so. But, recently we had that huge spike up last week around Thursday, and it was the highest since the December 5th price crash. So recently we've been seeing as prices dip, volumes have been picking up. And then I also look at the relative volume between buys and sells. And on those price dips, you've been seeing the buyers overwhelming the sellers. And we want to see that maintained on the price rise back up to confirm any type of stabilization or bottom. We're not really seeing that yet. So the latest price spike up that we saw, the volumes came right back down, and the buy-sell ratio is still pretty much stable. And we're also looking at the perpetual swaps market, which is basically like a futures market for crypto. Those funding rates have been fairly neutral. So it looks like there's a readjustment of risk. It's still very uncertain and no real clear signal yet of capitulation.
We're also seeing a lot of volumes in Russia and Ukraine. We have a chart on USDT, at least, to the ruble, and the volumes seem to be spiking there.
Yeah, so that's USDT. That spike has been very noticeable. I think it's around a 9-year high. So that basically was right around the Russia-Ukraine crisis. And that shows that there has been some movement towards Bitcoin or crypto, either from speculation or some sort of way to circumvent some of the controls that you've been seeing around Russia and Ukraine in terms of traditional dollars. So that spike was very reminiscent of the conflicts that we've been seeing around that area.
Yeah, CoinDesk has also been reporting that people in Russia have been buying luxury jewelry and such in order to maintain the value of their cash, basically, in the form of valuable assets. We also see that U.S., European equities are up for the day. Asia equities are down. So is Bitcoin. Is any markets correlation you're seeing, Damanick?
Mixed market views, right, across the region. I think during our hours, it was definitely the focus point was on the Fed. There was a testimony in front of the House from Jay Powell, and then you also have the geopolitical risks that are ongoing. There has been mixed messages around crypto. I think Jay Powell said the use of crypto to circumvent sanctions just increases the need for regulation, and that's pretty much a negative. But then on the positive front, we've been seeing some of those flows from those regions, so that's a sort of a mixed message there. And then, over the past month, we saw that Bitcoin was lagging risk assets, but then within the last week, there was a sharp rebound of sorts. So that put it well ahead of gold, traditional bonds, and equities just within that last week or so. I don't know what went on around there. It's probably some rebalancing, but now we're right around the 45. We kind of drifted back below 43. And March tends to be a fairly, negative month. So we'll see what happens here. The most certain part is that we're going to see volatility, and that's pretty much been a constant this year.
What's the support and resistance you're seeing for Bitcoin?
Lower support is around 40K, so I've been watching that fairly closely. 37K is the support line that we need to hold up to maintain that long-term uptrend. And of course, 30K is super important as well. Right now, the resistance was around 44 through 46K, and that range has been very, very strong. It's capped the price move that we saw in early February. Even though we snapped back within the last week of February, we still failed to hold above that line. And I would agree with Edward Moya, your guest earlier, who said that this widening range is pretty much in play, given the volatility that we've been seeing. On the longer term indicators, momentum has slipped negative on the monthly chart, and that gives you some time for broader selling to take place. I'm seeing that also picking up on the S&P 500. So it shows that this monetary shift, this shift from growth to value, is pretty much a secular thing. I think there's been a de-risking event going on around the world, and that's pretty much triggered by the rise in commodities that we haven't seen over the past decade. So that triggers an inflation event, and that also triggers slower growth in terms of preventing the consumer and businesses to really stimulate the type of growth that we saw over the past business cycle. So that's a very much broad asset class shift that could affect cryptocurrencies as well.
All right, and finally, Damanick, over the last couple months, we've seen a slide in Bitcoin, but just in February, we managed to eke out a big gain due to the soaring prices of Bitcoin on Monday. What's in store for March?
This is interesting. So past returns are no guarantee of future returns, but seasonality gives us a guide. And, January, of course, was a tough month, and we were negative then. February, we just about got that 12.5 or so. So it was right on the mark there. And above it just shows the average returns over the past 9 years of Bitcoin. And March has been pretty negative. And 29% of the time, you have closed positive. So fairly weak odds there. At most right now, geopolitical tensions are very, very much uncertain. So it's kind of hit or miss, but the trend has pretty much been down. But you have better odds in the months going forward. And some data shows that within 47 days or so of a geopolitical event, the S&P 500 tends to clear out those lows. And then 2 to 3 months after, it tends to be pretty positive for equity markets. And given the rising correlation between Bitcoin and the S&P 500, we can be fairly confident that it'll follow the same type of recovery path. But your odds are pretty much better towards the back half of the spring than immediately. So you could see some more chop over the short term.
That's a volatility ahead. Damanick, thank you so much. That was CoinDesk markets analyst Damanick Dantes. And that's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also, join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.